Hello there. Today's Monday. It's the first Monday of the third quarter. I don't know if that's how anybody else measures Mondays, but that's how I measure Mondays. So I have been doing a lot of obviously tax returns through tax season, but I also do year-end work as part of, sort of my monthly job. I seem to have a month end to do every month, or not a month end, a year end to do every month, and bookkeeping in general and that sort of thing. And a big part of that is verifying information. So sometimes I'll have a meeting with a client, or I'll ask them a question, and they'll give me an answer about their financial workings, their information, and I believe them. Let's just be clear. I believe my clients. I always believe them. But it's also my job to ensure that what goes into their financial records is accurate. And so that means that I have to be able to prove it. I have to be able to prove it because it's like, if I'm going to have to prove it to somebody else, like maybe there's an auditor, or maybe the CRA sends an auditor, or if I have a practice inspection, then I'm going to have to prove that to the inspector. Or if a year from now, maybe the client comes back and they have a question for me, then I'm going to be able to have to prove it even to the client. And so a big part of my job is to collect information from third parties. So things like bank statements from the bank, or loan statements from, like, maybe a BDC loan or something like that. And so to collect those documents and check them against what's in the books and make sure that what's in there is accurate, because it's not enough to just trust that it's right. We have to be very sure, and we have to go through and compare something generated outside of the company. So there's a really, really low, almost nil risk that it's been manipulated by the company, and take that and compare it to what the company is saying. And when those two match, that's when we know for sure, 99% sure that we're right. I mean, sometimes bank statements have errors, but generally speaking, the bank is going to produce a document that is not, it's usually right, 99% of the time it's right, and is definitely not going to be manipulated by the company itself. So trust but verify. I know that sometimes the people that I'm working with are like, I ask for a lot of paperwork, and I'm sure it's not much fun to have to go and collect all that stuff. But it's definitely for a reason, and it's not because I don't trust the person that I'm working with. It's just that I need to compile records for myself and for the business and for external stakeholders, like even maybe the bank is going to want to see proof. So trust but verify. And I think that this goes for other industries as well, that you want to trust the people that you're working with, and maybe it's suppliers and vendors too. I, for example, like to, with my bookkeeping clients, take supplier statements and compare them to what we have in their QuickBooks file. And excuse me, this is really to ensure that the two match, not because I think that the supplier keeps better records than we do, but just to make sure that they match, because sometimes maybe we missed an invoice, and so we can go back to that supplier and say, hey, can we see this invoice? And maybe the supplier's made a mistake. So if we keep independent records and then we check against each other every so often, then it makes us both have better records. I think that's kind of the basis of what Bitcoin's built out of, but I'm not going to go into that because I only kind of know how Bitcoin works. But yeah, tell me about, in your company, how do you trust but verify in your company? I'd love to know other examples of this, because I guess I'm pretty limited to just my accounting knowledge. So let me know. I hope you're doing well, and I'll see you tomorrow.